What's up, guys? It's December 4th, 2024. We had a sideways day in the market. Um, but we did get a tradable leg after the FOMC announcement around, I think, 11 o'clock or 10:45 my time. I traded some today. I just took like one or two trades and I was like, I'm just gonna relax and let this two losses in a row. I went from having a good green month. I had four red days in November, and one of those red days was -$4. And now I've had two red days in a row. So I was like, let me breathe. Let me just do trade how I know to trade, and everything will be okay. So this is the daily. This is now the 15-minute because I do look at the 15-minute way more often than the only time I look at the 45-minute is when I'm doing these videos, and you guys all know I'm barely even looking at it. So 15-minute is better in my opinion. So here's that. Been saying it for a while. Leg one, pull back, leg two. This leg two is my trade on the 5-minute chart. Within this leg two, we have a second leg two. Leg one, pull back, leg two. I love seeing more than a 3-bar micro channel, a weak bear signal. A weak bear signal is usually a good bull fade, and that's what I look for on the 5-minute chart. And look, bears didn't even trade below this. Excuse me. So bulls made 1R, which if you buy here, 1R is up here. And bulls made 1R and kept going. And now we have some nice looking bars. Trading at, are we trading at all-time highs? Crazy days in the market. Every new high has been a pullback. This last pullback has had so much overlap. You guys remember this sell-off in the beginning of the day, then rally, sell-off at the beginning of the day, rally, sell-off, rally, sell-off, rally, sell-off, rally. And now we're kind of rallying a little bit better. 15-minute chart, we have a good double bottom. Higher low here. Gap up, leg one. Gap up. And then from here for the bears, leg one, pull back, leg two. So leg one, pull back, leg two. Then we rally, leg one, trading range behavior, deep pullback, rally, breakout of the trading range. We have a 1, 2, 3, 4-bar Renko channel, bad sell signal, leads to another leg higher. This and this price action looks different, but it's the same. We have more than 3-bar rally, weak bear signal, leg two. So this is my favorite trade on the 5-minute chart, and micro channels are good to understand because they show trap traders, right? So limit order traders are going to fade. Let's just talk about 12, 13, 14, 15. That's another micro channel. I bought this high and I got out on like 27, lost like a point, but I was trading sim, so it don't even matter today. I just kind of wanted to stop. I wanted to still keep my feet wet, but I wanted to stop the bleeding, if that makes sense. So trading sim was that good in between for me. Okay, so 12, 13, 14, 15. Limit order bears are going to bet on a reversal. They bet that breakouts fail. They put a limit order here. Bar 13 traps them. They try and do it again. 14 has a big tail. And now there's a gap. Unfortunately, this gap closed, but I can use this as a better example, actually. Let me use these 57, 58, 59 as a better example. Limit order bears, see, we're here. This is where they put their limit order here, here, here. It's laced. They're betting on a reversal down. And then they get the breakout bar 58, follow through 59. Or bad for the bad signal for the bears again. So now they don't really have a way to get out at break even. They're forced to buy back shorts, and then we get a second, third leg. In a trading range, gaps get closed. This gap had a deep pullback, but there's a gap open down here as well. So that's kind of a very loose way of understanding what a good breakout 3-bar micro channel is, and that's what I trade. That's what these reviews are looking for. Is I try and keep these reviews as simple as possible because look, okay, 3-bar micro channel, no gap, so bears can sell, and make money. So this 3-bar micro channel was a fade. This 3-bar micro channel had a gap, so that means it's a with trend trade. I'm not fading anything, but this was a fade. We're trading here. You could fade it and make 1R before bulls did. Bulls bought here, bought more lower, they get out here. Bears get short here. If they don't get out before 1R, they're trapped. They have to short again to get out. So bears are going to be struggling when their gaps are small gaps are staying open. So get bears will quick bears were making money. Quick bears were making money. Anyways, let's talk about it. Remember we saw the 15-minute chart rally, leg one on the 15-minute. I said leg one, pullback, leg two, double bottom, higher low, and then we had that rally. These three bars should be the shallow bars on the 15-minute. What time is that? 11:50. 11:45. Yeah, see, so just around here is that pullback, and that's why I like. I do look at it. I don't trade the 15-minute, but I do look at it. I'm finding myself looking at it more and more throughout the day because this bar right here, 11:15. It closed at 11:15, so that's 56, 57, 58. That's so if I see one strong close here, I automatically know that's three bull bars in a row, and that's my setup. Now I'm looking for a pullback. So I like higher time frames kind of starting to tie in. I think sometimes I talk too fast. Let me slow it down. So we have a gap up. Bar one's a bull bar, but it has a tail on it, so it's not the best. It's a trading range bar. Bar two is a bear bar. I actually took this short and I got trapped right here. The reason I took that short was I was looking at these three bars down, first pullback, ended up being a second leg trap in a trading range. Got out, and then bar 6 and 7, excuse me, yeah, 6, 7, 8. 8 is an inside bar. Inside bars are the only bars that are not breaking out. Every other bar is a breakout or a form of a breakout. So bar 1 rallied and then sold off. So that's a form of a failed breakout. Leg 1, pullback, leg 2, second leg trap for the bulls. Leg 1, pullback, leg 2, second leg trap for the bears. Bar 9 and 10, you're gonna have to scalp out the EMA. We have a gap up, so right now the EMA is gonna be acting as support. Bar 11 rallies, sell off. 12, 13, 14, 15. It's a good micro channel. Shot on to get its own second leg. Second leg is achieved with bar 20. Trading one tick higher, you buy low. You can buy the breakout point for bar 12. Then this gets its own three legs. Leg 1, pullback, leg 2, pullback, leg 3, sells off. Testing this breakout point. Quick rally to the TTR high. We're in a TTR for most of the day. No, I mean, we were in a trading range for most of the day, yes. And then within that trading range, we had this trading range here. I do think it's very easy to get caught up in that, and I have been getting caught up in that the last couple of days, so that's why I was just taking it easy today. 42, 43, 42 through 49. It looks strong up to get its own second leg. It never actually trades one tick below 49, so bears are trapped. What happens when one side gets trapped? The other side typically gets a measured move. Wow, to the tick, the measured move, right? And then they stopped at just around 6,100. So a lot of things lined up for them to get a measured move because that never got a second leg. I'm sure on a smaller time frame, leg 1, pull back, leg 2, leg 1, 45, excuse me. So leg 1, 42, 43, 44, leg 1, 45 has a tail, so that's a trend line break. And it has a sell vacuum testing the low here. We get a lot of vacuums in trading ranges. If you're short, you got to get out. You start to get out around these three bars. Again, that's another micro channel setup. Look at 54. It's a bad sell signal, and it did sell off a little bit, but then it rallied, trapping bears. 1, 2, 3, 4. So just like how I mentioned on the daily chart, I like to see a rally, a bad bear signal, and then I buy that and go for the second leg. 54, I didn't buy 50. I wasn't trading around here, but 54 is that bad bear signal, and it did trade one tick lower. And that also means this leg down never got its second leg. So now bears are trapped. Bad sell signal. That's a good buy. That leads to another rally. 55, 56, 57, 58, 59. Another rally. That's a 1, 2, 3, 4, 5 bar micro channel. Shallow pullback 60. Bad buy signal. You want to maybe wait for a high 2. And you get that high 2 with 66. And you get another 3 bar micro channel. Now we're getting higher in the leg 1, pullback leg 2, pullback leg 3. But if we're continuously updating our expectations of the markets, 66, 67, 68, even the rally on 69, looks like it's strong to get its own second leg. And although it's strong to get its own second leg, leg 1, pullback leg 2, we have to start to ask ourselves, how the probabilities for a second leg change the higher we go in the trend. So leg one, pull back leg two, pull back leg three, pull back leg four. Because like you could say the same thing, 73, 74, 75, 76 was sharp. Okay, it's on second leg. But the more we go in a range, the less probability we have for continuation. And look, even though this was a great channel, and I would have loved to take this channel if it was more within the first leg, it got no continuation. Leg one, pull back, leg two, pull back, leg three, wedge bottom into the EMA, and close out for the day. Let's just measure the measured moves. I'm gonna call it good. 3-bar micro channel for the bulls failed for continuation, became a better fade. 12, 13, 14, 15. You can take your spin here. Sorry if you guys can hear my dog. We put the stop down here. Oh, excuse me. We buy 17. Maybe you bought this. 15, 16 is a bad sell buy signal, but it's also at the high of a training range, and bears could get a double top and we could collapse. 17. So let's just put below 17 because that's where it rallied from. Testing the breakout point. 12. 1 hour is met, and then we go sideways. So we have big down, big up, semi big down, big up, TTR, and then we sell off here. And you could be asking yourself, okay, well, I just said big down, big up, and then we went sideways. So how come we didn't go sideways here? Well, the market had to break out. It's a market cycle. The market cycle is range bound. Ranges are the end of the market cycle, and a breakout restarts the market cycle. So you could say this was a leg in a trading range, and then this leg is the breakout leg. Leg one, pull back, leg two, pull back, leg three. So there's a count, and then now let's just get these macro channels involved here. So you could just buy that if you want to hold to that deep pullback, and you get 1-to-1 there. You can buy it here. You could buy 55. I think 55 was the good buy because it reverses trapping bears on 54, reverses higher. 1.1 R's met, 1.5 R's met here on the high tail of 77. Now we have another channel here. Put it here. 1 R's met. Sloppy. There we go. We have this 3-bar micro channel here. Put it maybe the high of 73 looks like a good buy. And 1 hour is met to the tick. Everything is lining up around 6100-ish. 6100s here, around 6102. Let me draw the gaps in, and then we'll call it good, guys. Have a gap here. Well, we have a gap up, but that's not the gaps I look at. Look at these type of gaps, 3-bar candle gaps. So the bulls that bought these lows here are trapped momentarily. They have to buy more lower, and that gap gets closed. Now there's a bull gap. However, that gap gets closed. That gap gets tested with bar 17, creating another gap. This is a weak gap. Why is it a weak gap? Because it started with the bear bar. We like to see gaps with multiple bull bars, trapping more bears. Here's another gap that gets closed very quickly. 39, 40, 41 is a form of a 3-bar bull channel, but 39 had a bear close. I'm like holding in a hiccup right now. I don't know why these funny things happen when I start recording. Another gap here. Then we have a gap here. Rally, pullback. We have another gap here. Then we have one more gap here. And the later it goes, gaps can become, this is actually a bigger gap compared to these two gaps. The later the trend goes, these gaps start to become targets because market cycle. So we break out of the range, we trend, and then the last leg in a trend is the first leg in a range. So this was the last leg in the trend. That becomes the first leg in a range. This is the high, and that gap becomes a target. I'm not training like that, but that's just kind of what Al and Ollie teach. Hope you guys had a good day. Hope you guys had a profitable day. We finally got some breakout legs, so that's great. Maybe add something to the markets. We're starting to trade far away from the EMA. Whoa, is that the overnight session? Oh, no. What is the overnight session doing? Probably just, sideways to down. So look, these gaps are getting close here. The next target is going to be this gap, and then this high, and so on and so forth. Hope you guys had a good day. Yeah, I'll be trading. I think I'll be trading live tomorrow. I'll talk to you guys later. If you learned something, share the show. Thank you for your time. I always appreciate the questions and comments. I'll talk to you guys later. Bye.